Friedel is our head of finance. We recruited him out of New York City, and I still remember the first time I met him. I was walking around New York with my camera taking pictures, and it may have been my 30th trip to New York, but I still acted like a tourist, and he got a real kick out of that. Omri's a tremendous guy. He's actually going to finish today's show, don't let me forget, with a poem, which is he's become infamous for within our company. But what he's going to do today, I'm going to bring him on right now. Hey, Omri, why don't you say hi to our agentpreneurs?
Hello, everybody. Hope everyone's having a great morning.
Okay, first and foremost, Omri, before we get started, you have to explain your t-shirt because I saw it earlier and I was like, what is that?
It's just a Mexican branded t-shirt. I believe it's a wolf this time that I like. I've got a couple of those. It felt like the right spirit animal for this morning.
Have you been channeling your inner wolf these last few weeks, I imagine, right?
I'm trying to, yes. It's been an interesting times, and we just want to bring out the best in all of us. So figured this was an appropriate shirt for the occasion.
Absolutely. I love that. I think that's fantastic. So Omri comes with great credentials. He's a CPA. He was responsible for the reporting and tax structures of the real estate investments for a $15 billion asset portfolio for the Canada Pension Plan. Came to the U.S. and worked for JP Morgan. He's lived in 5 countries, 4 continents, 8 metropolitan areas. How many languages, Omri?
It varies between 3 and 4, depending on how fluent I am.
That's fantastic. He's got a lovely wife and 3 children, and he's a blue belt in Brazilian Jiu-Jitsu. So this is the guy that you want on your side during times like this. So Omri, as I mentioned at the top of this, we're going to handle this one a little bit differently. I've actually got your presentation up here. And for all of you out there watching right now, this presentation has a lot of information. So think of this a bit like a workshop. So Omri's going to go through this. I'm going to pull up the slides. Don't worry if you can't read all of the information on the slides. They are information heavy. We're going to post the deck in the comments. We'll make that available to you. So you're welcome to look at it at your leisure. Feel free to share this episode with anybody who has not yet taken advantage of the Paycheck Protection Program, because again, that's reopened as of today. And as we saw last time, that money sadly goes very, very quickly, and we don't have any insight into additional funding that's going to become available. So if you missed out on the last one, please make sure you do this one. So Omri, with that, what I'm going to do is I'm actually going to pull up your slides here, and I'm going to let you take it away.
All right, I'm going to assume you're on slide 2, the Payroll Protection Program, just a quick overview.
I am.
And even after this, me and my team, we're happy to make ourselves available to answer any questions online, offline, just to help whomever we can. Randy touched a little bit on this, a quick program overview. This is a forgivable loans to small businesses, independent contractors, self-employed, and gig workers. So it's not just the small businesses. If you're self-employed, if you're earning your own income, you can still get some compensation and some relief from this program, and that's very important. It originally was funded with just under $350 billion that essentially disappeared in less than 2 weeks, very, very quickly. And as of this morning, last week, they approved an additional $310 billion out of a nearly $500 billion stimulus increase, of which, as Randy touched on at the beginning, $60 billion is allocated to small institutions. I personally find that very important. Through our experience, the small institutions have performed way better than any of the larger institutions, especially dealing with the smaller clients. I think large institutions dealt really well with bigger, richer clients, but have to some degree failed their smaller ones, and we're hoping that this 60 billion helps alleviate that. One caveat, and there's probably quite a few of them, the biggest one is you have to be in business prior to February 15, 2020, whether as an individual or as a business. The way you calculate how much is forgiven, it's essentially 250% of 1 month of payroll, capped at $100,000 per employee. I've defined payroll in Appendix A. You can refer to it later because who knows exactly what payroll is, and it's defined in the regulations. And this is designed to cover 8 weeks of payroll costs, health coverage, mortgage interest, but not the principal, any rent or utilities, and interest on debt that has been incurred prior to February 15th, as well as refinancing of any other emergency relief funds you may have received. So there are a lot of different uses. And when we get into the forgiveness part, it's important that 75% of the proceeds should be used for payroll in order for them to be forgiven, a minimum of 75, or conversely, a maximum of 25% for other uses as indicated above. And then you can get the whole thing forgiven. If for
And
whatever reason
Omri,
not
if I could, I just want to interject. You made this point. I just want to make sure that this is very clear to our audience that this is in fact available not just to companies, but to independent contractors, gig workers, right? Pretty much our entire audience has access to this money. Is that correct?
absolutely, as long as they were in that capacity prior to February 15th.
Right. Okay. Great. Great. Okay. Thank you.
So if somebody started an Instacart business after, unfortunately, no. But if they were working in some capacity prior to that and have that income that they need to support, they can certainly apply for this loan.
Fantastic.
Worst case scenario, you don't get this forgiven, you're getting a 2-year loan at 1%. When we approached this, that wasn't the end of the world. Even if we got the money, if for whatever reason this does not get forgiven, and there are many reasons that could occur, we have a 2-year loan at a 1% rate, which even at today's interest rates is not half bad. Also, payments are deferred for 6 months, meaning you do not have to go out of pocket for 6 months from the date of loan. However, interest does accrue against it. The program opened on April 3rd, kind of, I say, because I would say it was a very soft or stalled opening. It reopened this morning at 10:30 Eastern, so just over 3 hours ago, and it should run theoretically until June 30th. I would say the money, the extra 310 billion, will run out probably in the same 1 to 2 week time frame. However, I also expect other stimulus packages to start kicking in. So this may get replenished in a more further capacity, or other things may come in the future. We'll have to see exactly how that happens. So next slide, please, Randy. So how were we successful? And that's kind of what we really wanted to walk through. We tackled this. We're a team of 70 to 80 people in all, and the finance team is 2 people, and our legal team is 1 person. So the real people focus on this from our perspective. We were just 3 of us. We don't have an army. We don't have massive council. We don't have a whole bunch of people running around behind the scenes doing things. We're still a small business. We're still very much in need of these funds. And how did we approach this and actually become successful? First of all, we embraced ambiguity. Let's just be honest. Nobody knows what's going on. We don't know. The banks don't know. Any of the lenders don't know. I would hazard a guess the lawmakers nor the SBA really know what is going on and how this actually functions. Nothing you could do to change this. Just accept it, deal with it, and focus on what you can control. And from our perspective, we could control a few things. We could control how we understood the regulations, how we interpreted the regulations, and how we approach getting that loan. So the first thing we did is we spun up our team. What do I define as a team? It's anybody who can help you. If you have internal people and you're a small business, great. If not, it's your consultants. It's the lawyers you work with. If we're talking the real estate industry, every agent knows a lawyer. Now, that lawyer might not be an expert in government grants, but that lawyer should know other lawyers who are, or should know other lawyers who have that access to the information. Same thing with your accountant, any financial advisors, and your bankers. All of these people should, in fact, have been begging to give you information. If they weren't, that should tell you a message on the quality of people you work with and whether or not you should seek to replace them. And I'm not trying to say anything bad, but this was a real interesting opportunity to evaluate the quality of people you work with. These things don't happen often, but they give you a real test. Lastly, friends, current and former colleagues, business partners, a lot of people are in the same boat. Everybody's running around seeking information. I joined a few Slack groups and other online groups just to get information and to share information, and that has been very helpful in both understanding the regulation and interpreting what it means, which is the next step. You have to understand the regulations, which is what we did. We got information from, and by the way, a lot of this information is free. You can go on the websites from H&R Block to the government website. It's very, very accessible. You just have to put in the effort to search for it. We researched and understood what the regulation meant and what it meant for us. There are affiliation rules for companies that have investors. There is an application process that everyone has to go through. There is what qualifies and what not qualify for the program, such as what is defined as payroll. Can an independent contractor that works for us as ListReports actually count as a payroll item or not, or are they separate? So we went down and dug into all the questions and got all those answers, or at least got a version of all those answers we felt comfortable with. Next, we prepared all the materials. There's a lot of materials you may or may not need, and frankly, in retrospect, most of the stuff we did not use. However, we had it ready just in case important. The application, and this was maddening to me, the application was 3 pages with a few signatures and a couple of initials. The fact that the subsequent demands that the banks and the lenders unleashed on everyone, I still don't understand. It should not have been as complicated to receive it. However, I can't control it. I can't do anything about that. What I can do is find other sources and other ways in which I get my application processed. So we completed the application. Because it was unknown, we probably completed 5 or 6 different versions of this application every day as the rules got clarified and as we received feedback from different lenders and those accepting the application. We gathered up all our supporting information. I have a great picture of Randy from a long time ago on his driver's license, as he's one of our 20+% owners, and hence we needed his information. I have a similarly phenomenal picture of AJ, our CEO. We have resumes on everybody. We have our leases. We have tax returns. Everything that any bank could have possibly asked for that would qualify or disqualify us for that loan, we had ready and waiting, and we had it organized. So a lot of information has to be organized and it has to be simple to access. Next, we had to find the lenders. The first avenue, and what I think many people tried, is to go to their bank. I would say when you first selected your bank as a business owner, you didn't really care. When I first moved to this country, I worked for JP Morgan. I chose Chase as my bank. I didn't do any diligence on whether Chase was a good bank or a bad bank. I didn't check Wells Fargo. I didn't check anybody else. It was convenient. I worked at Chase. It was at the bottom of the building. I'm going to guess many people did the same thing. I would say our immediate banking relationships are great at providing us cash, are great at providing us credit cards. However, in a time of emergency, in a time of need, they were not as great as we expected them to be. And hence, we went the next step. We found small regional banks, credit unions, and any other lender we could find. They were debt matching services. Even companies like PayPal were lending. So the amount of people engaged in trying to funnel the money from the SBA to the business owners is actually massive. You just had to research and find out who those people were. And we did. And we did to the extent that we actually found close to 30 different lending institutions that would accept our applications. A lot of them disqualified us. JP Morgan Chase, you had to be a business client of the bank for them to accept it. And I understand that. It's clear. It immediately tells me I do not need to spend time or invest money into or invest effort into this, because us as ListReports, we're not a JP Morgan client, no point of even going down there. However, we did find a bunch of others that were willing to accept us even though we were not clients. And then we pursued it, and we pursued it relentlessly. In all, we applied, and I'll get into this, 28 different times in 28 different institutions for us to get the loan. So we pursued, and while many people may say, hey, you put in 28 applications, fair enough, I can only get one loan accepted. All others will be rejected. So I'm not really interfering or getting ahead of myself. I'm not going to get 2 loans. I can't. I wouldn't even take the money if we did. But we pursued it relentlessly. We followed up. We chased everything down we could. And it effectively became a full-time job for my team for almost 2 weeks of just pursuing and getting everything ready. That's it for this slide, Randy. Not sure if there are any questions coming up, but let me know.
I'll definitely let you know. This has been a great overview so far and how we found success in this.
So what would my advice be to everyone here? If anybody's unclear of the regulations, if that's still confusing, it is what it is, but please reach out to all the different people you work with. Your tax preparers, your bankers, your advisors, your lawyers should all know or have access to this information. And if not, look me up on LinkedIn. I'm happy to help, and I'm happy to supply whatever information we can in terms of clarifying what we did from our perspective and how it affected us. Make sure you have all your supporting materials. Also, towards the back, we're putting in how it is slightly different from an individual versus a business, where we get our records and our supporting information on the amount differs as we're using payroll records. If you're an independent contractor and you're earning 1099 income, you're going to pick that up off of last year's tax return. I don't recall off on the immediate schedule. I believe it's 1040 line 31, but it's referenced in Appendix B at the end of this deck. So you can find out that information. Make sure you have all the information you need organized and ready to go. Just get it ready. You don't know exactly what the banks will ask for. In the 28 different applications we filed, we encountered 28 different processes and requests for information. Again, shouldn't have been that complicated, but it was. Complete the calculation. The calculation is simple. It's capped at 100,000, meaning if you make or your defined payroll costs in aggregate total more than 100,000, the most you can file for is 100,000 annualized. That's your max. You divide that by 12 to get the monthly amount, and then you multiply it by 250% or 2.5. So for one person, if you're an independent contractor, that amounts to about $20.8 thousand of a loan that you can get, and then use it for the appropriate usage as indicated both previously in the slides and in Appendix A. And then find the lenders. The lenders are everywhere. On the link that I have there, there is a recent blog of who is still accepting the loans, and I've named a few of them. We found great success with Celtic. We found great success with Womply. What I mean by great success is they were responsive, they were efficient in accepting information, processing it, and in asking any questions and in getting the application in. Funny little nuance, it was our 27th and 20th applications that got approved, not the first 26. So keep at it, keep consistent, and don't just think because it's in there, you're good. You gotta pursue, and apply to as many as you can. And the reality is, if you get approved, all the other ones will immediately get rejected. And what we did is as soon as we got approved, we withdrew all of our applications from all the other banks that we had to just clean it all up. So you're not gonna be able to get 2 approvals, but keep pursuing it because you don't know which is the one that's going to hit. And it was ironic, it was the last 2 that really hit for us. The rest are following up now, but as we said, it's a little bit too late, and we've already withdrawn them. So what happens if you're actually successful? And this is also the next important thing, and you can use the same framework. If you're successful and you get the loan, we're still stuck in the exact same boat. I view right now we're 1 week in exactly to having received the loan, which means we're 7 weeks away from hopefully getting it forgiven. But nobody is yet to really define what forgiveness means. There's a framework, but the actual interpretation and the definition and analysis hasn't been done. And realistically, it won't be done for another 7 or 8 weeks. So it is what it is. Let's just get it ready. And there's a few things you can do to get ready. Make sure you're still talking to everyone. Get the latest and updated information. What are different companies experiencing? What are different viewpoints on what is and what is not forgivable? How are people tracking it? Some people set up completely separate bank accounts. That's perhaps a best practice, perhaps not. What is important is to really track how it is you're managing the money and understanding what it is the regulators and the banks and the lenders will look for at the end of this. So keep talking to everyone. And if through the early part of this process you found that those giving you advice are not giving you good advice, you have 7 to 8 weeks to source new sources of advice to try and help you out. Use that time. Understand exactly the regulations. There are new rules coming out. Did you have additional sources of capital you can use? Could that potentially disqualify you from forgiveness? Did you really need the loan? Were you really in a dire financial situation? And how do you prove that? Is it declining sales? Is it a shutdown of a business? Is it the requirement to reduce salaries? There are many different nuances of what that actually means. Has your employee base changed? This is much more pertinent if you're an employer. The total payroll levels and employee levels have to remain consistent by the end of this time frame. So that's really relevant. How much did you apply for and how many employees were there to how many are there currently at the end of this cycle? And what is the way to remedy that? Because the regulations will allow you to remedy that. Keep all your records clean, kept and prepared. How did you pay the money? Who did you pay it for? What did you use the funds? Make sure it's crystal clear so that if the regulators or the bank auditors, whomever checks on this at the end comes and asks, you can prove that we've got an X dollars, here's how we use that amount of money, so it's easier for you to get it forgiven. And then pursue it. Make sure you're ready for all different eventualities and scenarios, and understand that if you do a certain step, it might affect your forgiveness in the future. In short, don't take that forgiveness for granted. Just make sure that you're as clear as possible on what you can do. And a note of warning that I kind of half laugh, half cry about, the same people who processed the loan and gave everybody such a wonderful, tremendous experience, that they're going to be the exact same ones who have to figure out the forgiveness. So you're dealing with the same people. You cannot control that. And I don't doubt at all they're trying their hardest, but they're also dealing with complex regulations that are coming fast and changing. Control what you can control, do what you can in order to get your information in order and make their job as easy as possible. Because even though they're processing it, the onus is on you to get it right. So just do the diligence you need to do and make sure you get it right. And that's it for that slide. The last slide I have, and the last couple here are more of referral appendices, so hopefully they can help anyone who's referring to the deck on helping in their calculations, defining what it is their payroll amount is. But what did I really learn from this, and what did we as an entity learn from this? We're nearly $2 trillion into the stimulus package. How much more is there to go? I think the estimates range up to $10 trillion. That's a lot of money. We're only a month and a half, 2 months into this. There's a long way to go and a lot of other packages coming. So make sure you stay informed. Even just everyone is focusing tremendously on the PPP. It's only one part of the CARES Act. I'm sure everyone's received or is hopefully in process of receiving their stimulus checks. Beyond the $310 billion just released, the stimulus package included another $75 billion for hospitals, $25 billion for testing, and $60 billion for the other emergency loans available via the SBA that you apply for directly with the SBA. Be prepared. Again, make sure everything you have is organized. Understand the regulations. Accept the fact that it's going to change and there's a lot of them are unknown. And just gather what you can and do the best you can to your advantage. Really evaluate your support network. We're doing that. We learned a lot of who's really helpful, who's willing to come out and help us. We're willing to come out and help just about everybody who reaches out, and we reach out to people we know to help them in this process. One thing that I really found interesting is have a contingency plan. This is both professional and personal. This hit companies and it hit people. Have a contingency plan and really test it. We keep on calling this a once-in-a-lifetime event. I've lived through at least 3 once-in-a-lifetime events, so I'm not sure how accurate that is. They actually happen more often, and changes in regulations that out of nowhere impact people occur annually, if not more often. You see that in the housing market, you see that in tax regulations, you see it everywhere. So just have contingency plans, figure out what could screw those up, what could throw them for a loop. We thought pandemic, now we're at home for 4 weeks. What if those 4 weeks become 12? What if after everybody reopens, nobody really wants to go back to a movie theater? How does the movie theater react to it? There are a lot of unknowns. Test your contingency plans. Make sure they're up to these different standards and different creative ideas of how they can go wrong. And one thing I also learned is that leadership really matters in certain cases. So leadership that embraces transparency and adopts responsibility and accountability matters. I think that's why
Oh, looks like we lost Omri there. Give me 1 second. Let's bring him back on. Looks like we had some internet issues. Hey, Omri, you there?
Yeah, I am.
Okay, we lost you for just a second, but you're back just for about 10 seconds. So go ahead and continue. We're on the key lesson slide.
What was the last thing you heard, just to make sure I know where to pick up?
Oh, about leadership. So go back to talking about leadership.
Then it's leadership that embraces transparency and adopts responsibility and accountability matters. I think we saw
Looks like we might be dealing, unfortunately, with some instability on Omri's side. Yeah, it looks like his internet connection has dropped, unfortunately. So I think we were at right at the end of that. We'll see if he can pop back on because he had sort of a delightful end to his presentation. One of the poems that Omri has become famous for. But that's great information. So that presentation is going to be posted in the comments. So we're going to have that available to you. There'll also be a YouTube video up probably within the next couple hours. So please feel free to share this or share this Facebook post with anybody in your network that hasn't yet taken advantage of this money. There's a couple more slides in the deck that are more appendix oriented, and it has a lot more detail that I know we weren't going to go into on this show, but there's an appendix for what does payroll cost mean, so what it includes and what it doesn't include, which is very important, and then other facets of the CARES Act, including the EIDL that Omri referred to, which is the Economic Injury Disaster Loan, recovery rebates, charitable contributions, etc. So Omri put together a ton of information. Super grateful for that. Super grateful for Omri and his team for how hard they worked at this. And I think you've heard some of the lessons here, right? Which is we were relentless about this. We pursued. And if somebody's not helpful, you go somewhere else. Only one application can get ultimately accepted and funded. So find the path that's going to work for you. There's a tremendous of great information in here. Unfortunately, he isn't back, but I'm going to post this poem in the comments because you have to hear it, and maybe we can have him deliver it in the future. So with that, I think we're going to wrap today's show. Come back tomorrow. Tomorrow we've got Eric Mitchell, who's going to give an update on the mortgage market, which is very, very relevant to what's happening right now. Been tons of changes, it seems like almost daily in that side of it. And I think today's episode is indicative of what we want to do with the show, right? Which is we want to bring you timely information, which is why we do it live and why we switch up the schedule sometimes. So hopefully today's information was useful for you. Tune in tomorrow to see Eric Mitchell and on Wednesday with Wasal Cotter, and we've got a great lineup this week. And until then, be safe, get your application if you haven't already, and we'll see you tomorrow. Thanks.